Hello, everyone. Welcome to another edition of Coffee Break. My name's Steve Barrett. I'm the editorial director of PR Week, here with another show, and delighted to have Jen Prosek with us, who's the founder and CEO of Prosek Partners. Jen, how are you doing? Welcome to the show.
Thank you for having me. I'm doing great, considering.
Yeah, I mean, we were just talking about that before we started recording. Tell us a bit about your lockdown situation, how you've been and how the agency's been coping during this period. I was going to say temporary period, but it's going on a bit longer than we first thought, isn't it?
For sure. So the agency's doing great, and my colleagues have pivoted beautifully and have clients. I am normally a resident of the West Village of New York, an enthusiastic New Yorker. I did move out to Connecticut for about 5 or 6 months during the pandemic. But as I was telling you before, I've been going into the city about once a week to just eat in my local restaurants, see a few clients, spend money, and be part of the New York recovery, because I think it's so important.
Yeah, I agree. I think we take a lot of things for granted, don't we? And we're even missing the tourists a little bit, aren't we? Because
I'm missing everything. We took everything for granted.
Yeah, we do. We really do. We're going to appreciate the simple things when we go back. Do you have a feel for when you'll go back, or are you just playing it by ear? And
like everyone else, the safety of our people is the most important. And we've done many internal surveys, and there's very little demand to go back to the office. So we'll be closed until it's really safe. We sort of called a January 1st return date, but that's likely not going to happen.
Yeah, it looks like it's going to go beyond that now, doesn't it? But tell us about Prosek. How's your year been? How's your part of the industry? Because you deal in sort of financial communications and corporate comms. How's that been impacted during the pandemic? And I guess in some ways there's been even more demand for the type of services you offer.
Yeah, so I mean, like most firms in the beginning of the pandemic, we had a little bit of a scare, meaning some clients hit the panic button. We did lose some clients. We had clients cut their budgets. And that was sort of in the March, April timeframe. And then things quickly pivoted, and our clients in some ways needed us more. Many, many times people have asked me, are you worried you're exposed to one industry? And normally I would say diversification is a good thing. I think we're lucky to be hooked up with the financial services sector because it's performed pretty well. And certain areas of our portfolio, like the private markets, private equity, private credit, I mean, they've been waiting for this opportunity for some volatility, hedge funds even. So, we've had, obviously, like everybody, some performers and non-performance in the client base. But if you're doing strategic corp comms or special situations, crisis, and focused on financial services, you're one of the luckier, I think, firms in the industry.
Yeah, I mean, and you've been growing exponentially for a number of years now, sort of from 15%, I think, last year, 16%. Are you going to be, what do you think you're going to be this year? Is it going to be, are you still going to see growth, or is it flat or a bit down?
Yeah, I think, one of the reasons we've grown so much is, I always say we're mining an emerging market. I call it the emerging market of marketing. Financial services firms are still getting online, some of them to sort of what I would call the proactive brand building marketing side of the equation. They've always been good at defense, or they've always been good at M&A, but this part of the market is still an emerging market. So we've been lucky that we built the firm to service that side of the market too. This year, I think we'll see single-digit growth at the end of the year.
Okay, well, that's pretty good. Most people would be happy with that, I think.
Happy problem. Flat to single digits is good news.
Double digit, isn't it?
Yeah.
We've been doing a lot of content at PR Week over the last 2 or 3 years about purpose in business. And at our PR Decoded conference, we had Frank Cooper from BlackRock, the largest asset manager in the world. They made big statements about purpose and only investing in companies that have purpose. We saw the Business Roundtable, the big high-profile announcement a year ago.
Yep.
How's that impacting what you do, and how much are you getting involved in that? And how difficult is it to persuade, if you like, hard-nosed financial people who really look at the bottom lines and shareholder value that purpose is the way to go?
Well, I have to say that I've been completely blown away by the adoption of D&I, ESG, and the action. You know, it used to be talk, now it's action, even in the financial community. And part of that is really authentic interest, and part of that is the pressure of, for instance, institutional investors and others that they serve. There are requirements to for D&I, ESG, and all these things. So we're seeing a massive revolution, frankly. We're a big part of it. We're happily, guiding our clients through it and navigating. I would say, you kind of asked about, the most stubborn old school of our crew. And I remember after George Floyd, I spent, many evenings emailing CEOs of private equity firms and hedge funds, just saying, look, your employees are going to expect you to be part of the solution. And I didn't get any pushback. What I got was like, I've been thinking about it. I'm not quite sure how to handle it. Can you help me? I know it's important. So I think we're seeing pretty much across corporate America, but in the financial sector too, real action and real care and real authentic embrace of the future and what it's got to be.
That's good to hear. Are there any particular examples? I mean, of people actually doing things that really impressed you, or you think is the way to go for corporate America, especially the financial?
Sure. I mean, everyone has their own thing that they're doing, but I look at someone like Robert Smith at Vista Equity Partners and all that he's done for the Black community. His, making college free at Morehouse. Those sorts of leaders kind of lift all boats. Everyone looks at that and says, I need to step up my game. So yes, I think there's a few standouts, and certainly Larry Fink at BlackRock has not just taken the financial industry forward, but I think taken corporate America forward with his thoughts and his letters and his thought leadership, but also his action. I would say State Street and their efforts of getting women on boards has been unbelievable. So there's many, many examples of real action that's being taken in the financial sector for sure.
Yeah, good to see that. Tell us about the markets, because they're so volatile and it's difficult to make sense of them, right? We're in the middle of one of the biggest recessions ever, yet the markets have been really high, and then suddenly they'll dive 900 points in a day. Can you make sense of them? What are the trends you think we should be looking at, and especially in communications?
Gosh, I wish I could say that I could predict the financial markets. What I can say is I'm lucky to be surrounded by some of the most brilliant investors in the world. I think the markets have surprisingly performed considering everything that's going on. All I can say is I could talk about the PR economy, right? I have to say, I say this all the time to my people. This is a communicator's crisis, meaning when in the world have business leaders had to deal with a health crisis, an economic crisis, a race and inequality crisis, and many other things all at one time? Leaders are struggling to communicate. They need us more than ever. So I think the PR economy is very good. I think a lot of firms, obviously, that were in afflicted sectors like travel or leisure or restaurants took a huge hit that will be difficult to recover from. But most of those firms still have very strategic advisors. And if they can pivot fast enough, there is lots of work for strategic advisory firms. I think if you look at firms across the board, those that specialize in the higher end of strategic advisory are all performing very well because there's such a demand. And I think that demand will continue into 2021, which we all hope will be a much better year, but will still be a pretty volatile year.
Yeah, it will. I'm sure it will. You were founded in 1990, so this is your 30th anniversary. I'm sure you probably need to celebrate it in a slightly. Yeah. You must have had loads of offers over the years. In fact, I know you have, from holding companies and other people wanting to buy you, but you've stayed resolutely independent. Why is that, and how do you see that panning out? Will you ever sell out, or do you actually like it the way it is and it works for you?
Well, I love the business, and it's hard to imagine having to sort of report to someone else about certain things at this stage where there's so much growth and opportunity ahead, and I'm still having so much fun as our partners. We kind of wake up every day saying, "My God, isn't this exciting and fun?" We have our up days and our down days, but we can make decisions and we can make them fast. I mean, we're a very entrepreneurial firm. And I think that that our ability to move very quickly, I think, has been a huge part of our success. Never say never. You know, we could take a strategic partner one day, but at the moment, we're really loving what we do. We're really loving being independent. And I think, you know, the number one thing I always say is I run a talent business, not a PR firm. It is all about people. It is all about talent. And you have to be able to make talent decisions quickly, fluidly, without a lot of rules. And I think those are the things I love about being independent. I also think half my client base is big global corporates, but half are private companies run by entrepreneurs. They are entrepreneurs in the financial industry, most of them, but there's also this entrepreneurial connection that I have with these folks. And that is the fact that we're running independent firms, and we get to sort of trade information on how our businesses run. So that really excites me. So I don't see it happening anytime soon.
Okay. Yeah, if you're in a holding company, you want to make a hire, sometimes the layers of red tape you have to go through. It's just, and the people, they've gone, they've gone somewhere else, or they've just, made another decision, haven't they? So you're absolutely right about that. You've just, as we speak, released a survey of financial journalists, especially the way they've been operating during the pandemic. What are the sort of top line findings you can tell us about that survey?
Sure. Well, as a business owner, my selfish interest in doing that survey was to figure out, will New York and London remain media hubs? Because if they do, our real estate footprint, our talent footprint, everything will still wrap around those centers. But if financial journalists are being told, no, you could work from Wisconsin forever, that kind of changes a lot for our business and also for our clients. So I was curious what financial journalists were hearing from management. I was also curious how the pandemic has really changed what they do. I mean, the top line is, thankfully, I think over 60% of financial and business journalists absolutely believe New York and London will recover and be the media centers they were. That obviously we will all crave and deserve more flexibility, but you can't sort of put a price tag on the in-person interview. They've all had a more difficulty sourcing, and they have all, over 90%, say they're leaning more heavily on PR people, which is good news for the industry.
Yeah, we've seen some interesting new media business models emerge, haven't we? Axios and Morning Brew and the Skim and senior journalists just going off and doing their own thing, with their own blog-based products. Can you tell us anything about that trend? Did anything about that come out?
Yeah, well, we've had Dan Roth, the editor of LinkedIn, recently speak to our people. And, as you would assume, the LinkedIn viewership is very active, more active than ever in the pandemic. And that they have also realized that newsletters, you mentioned Axios and all the rest of it, are extremely popular. So LinkedIn, for instance, just recently launched the ability for you to procure your own newsletter. And I've actually been experimenting that with myself. And I would say the interesting thing about publishing in a newsletter format versus just posting is the engagement level. If people opt into your newsletter, they care about the topic, they think you're a good author, and they engage. I mean, I get something like 40%, 50% engagement levels on my LinkedIn newsletter. So it's, I've been experimenting with it myself because I want to be able to really advise my clients from personal experience. But yes, I think newsletters, we're going to see a lot more newsletters launching in the media, and I think they're very popular now. In that same discussion, it was clear that, viewership trends have definitely changed in the pandemic. So you've probably seen this yourself. Breaking stories, like the FT used to break their stories 7 a.m. in the morning, because people were commuting. Now things have changed. So I think the media is actually adjusting using, technology and data to adjust how they break stories, how they deliver newsletters. But I'm seeing the media business having, a really interesting time in the pandemic, in a positive way, because they just they have more of your attention, right? Which is good.
Yeah, we've got more of your attention. We've just got fewer people to keep the attention, but it is fascinating to see the way those trends are playing out, and urge everyone to check out your survey. Jen, thanks so much for joining us on Coffee Break. It was really great to chat, and continued success.
Thanks for having me.